I'm Matt Bishar with REIT.com here in New York City for REITWeek 2014. Joining me for this CEO Spotlight is Gershenson, the President and CEO of Ramco-Gershenson Properties Trust. Dennis, thank you so much for joining us.
Thank you for having me, Matt.
Now I'd like to start by talking about the current lease environment. Now, can you talk about the expectations you have for leasing spreads and occupancy rates this year, and what's driving those results?
Well, first of all, as far as the leasing environment is concerned, we're all aware that sales have been relatively flat for most of the retailers. That has not stopped, however, a significant number of retailers from initiating a major expansion program. This includes the T.J. Maxx's of the world, Ross Dress for Less, Dick's Sporting Goods, Gordman's Department Store, Hobby Lobby, DSW, and many others. The primary driver, I believe, for that is they obviously want to increase overall sales, and if they're not getting the customer to increase sales on a same-store basis, then they're opening new stores in an effort to drive sales. That, of course, benefits us. We have a very high occupancy rate, which allows us to be very selective in the tenancies we put in. We're also finding that multiple retailers are interested in taking the same location, which creates competition and therefore drives rental rates. So we see occupancy remaining very strong, potentially even going a little bit higher. It's tough to get above 96%, but we do see high single-digit increases overall in our rental rates.
Now, what about the company's development and redevelopment activities? What do you see there for the rest of the year?
Well, first of all, we've been very active in both redevelopments and development. On the redevelopment front, we have approximately $100 million of redevelopments underway, which takes three forms. First of all, expansions of our existing centers, both on-site and on adjacent land, when we acquired property next to the acquisitions that we've made. Secondly, is that we have done a very good job of redeveloping existing assets where we had taken vacant space and either combined those spaces or moved tenants around to make room for the new and exciting retail concepts. And then lastly is the ability to look at certain retailers who potentially just either are not the right tenant for that trade area or their concept isn't as viable as it used to be, and working with those retailers to leave the centers so that we can bring in those operations that really make sense in the current retail environment.
And lastly, you've seen all sorts of trends come and go in the shopping center business. You've seen all aspects of the cycles. Are there any sort of big picture game changers that might be out there that may really significantly impact the business?
Well, there are always game changers, which is one of the exciting things about our industry. However, we are an evolutionary business, not a revolutionary business. Therefore, what you're seeing is a natural progression in the retailing industry, the same as downtowns in part gave way to the suburban shopping centers, department stores to specialty stores, outlet malls, etc. So the latest iteration, obviously, is the internet. What's happening with the internet is that those really savvy retailers who understand multi-channeling concepts are indeed adapting the best of the internet to their bricks and mortar approach, and those who don't get it will fall by the wayside, and that is just kind of the term creative destruction, and so we're experiencing that in our industry as other industries are experiencing it as well.
Dennis, thank you so much for joining us.
Thank you for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.